All right. Good morning. Early morning crypto talk. Bitcoin Brandon from Los Angeles, California. Thank you for taking time on your schedule for being here on this Saturday morning. What can we learn today? Go ahead and type in the chat box where you're listening in from. I see we got Stan Williams from Florida, Lynette Rubel, Omar Jerry, Jay Guillory. And as a disclaimer, I'm not a licensed financial advisor to be giving financial advice. I read the news, give my opinion, share suggestion, and it is up to you to make an informed, intelligent decision on which direction you want to move into. There's 4 rules I live by in the crypto space to have success. Rule number 1, education is key. Education is everything. Rule number 2, never invest money that you cannot afford to lose. Rule number 3, always get your return on investment back as fast as possible. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What are you willing to do to make it happen? What vehicle of choice? Make a decision, take action, and remain focused. Do not get distracted. Now, following these rules is not going to guarantee you success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. What's going on? Cynthia from Arizona. James Davis from Dallas, Texas. Jacqueline Briggs, St. Petersburg, Florida. Bitcoin from DC. Tony Pinkston from Philly. All right, first up, let's share screen and look at what is the market doing today. Remember, guys, I moved on from CoinMarketCap, CoinGecko, much more detailed. So let me pull this up on my other computer, make sure that I can see what you guys see. First week of April is down. Can you believe that? Time is flying by very, very quickly. We're running out of time. CoinMarketCap is at 177 billion. It is up 1.2% the last 24 hours. Bitcoin dominance is at 50.2%, so we still see a rise in the altcoins. You ever want to see a sign that a bull run is happening? This needs to be below 50% BTC dominance. And this needs to be at the $300 billion mark. That's when I will start talking about we're in a bull run. This is fool's gold we're in right now. Don't be fooled. Don't get trapped. Everybody's coming out the woodworks excited because Bitcoin went up just a couple hundred points. Bitcoin is at 5,088. Been hovering there for a little bit, last couple of days. It is up 24.8% over the last 7 days. So it's a 25% increase in 7 days. Bitcoin Cash is up 85.7%. Let's see, the last 24 hours, best performer is Ravencoin, 13.6%. Cosmos, any top? Litecoin, 8.4% last 24 hours. Somebody told me, what was it? Yesterday morning, I got a message. Someone said Litecoin's about to have a rise. I got to go back through my message and see who that was. And listened to him, you would have got 8% rise on that. Augur, EOS is up 6.2%. Any worse performers? Who are the bad performers? Qcoin shares down almost 10%. Steam. PoonDX. People keep asking me why. Because I got to go through and look again, but I don't think PoonDX has a USD pair. I think it has a BTC pair. Coins that are not pegged to the dollar or have a pair to the dollar haven't been doing so well during this run. Bitcoin Gold, Enigma, but Pundi is still up 6% over the last 7 days. Not that bad. Still up 6%. All right, let's take a look at some news. We're going to start with the media. Crypto hater. I saw this the other day, but I was busy, so I didn't have a chance to really pay attention to it. Backlash bills after CNBC's Becky, her name is Becky, really? Becky quick ridicules lottery ticket Bitcoin. So she's comparing Bitcoin to playing the lotto. All right, Becky, let's see what you had to say and why the backlash. And I reported this last year. Anytime you hear CNBC, Bloomberg, Fox Business, anytime they talk about anything in crypto, do the opposite. Because if you did historically, you'd be 90% right. They've been 95% wrong on all of their little predictions. You do the opposite of what they say. Never follow the mainstream media when they're giving advice about crypto. Nobody has been harder on Bitcoin than the mainstream financial media, particularly during the crypto winter. Now that the market is showing signs of strength, Bitcoin is back on their radar. But some continue to miss the point. Among them, CNBC's Becky Quick probably got Bitcoin the most wrong. Becky Quick's disdain of Bitcoin began to seep through in a television interview with FundStrat's Tom Lee on Squawk Box. At first, the CNBC anchor's concerns were reasonable enough surrounding how Lee came about a fair value price for Bitcoin. Tensions quickly escalated, however, at least for the audience, when Quick called his recommendation or her recommendation for investors to make a 1 to 2% allocation to Bitcoin crazy. Oh, Quick called his recommendation. Really? That's crazy. She continued her tirade on Twitter after follower Eric Weiss, the founder of hedge fund Blockchain Investment Group, called her out on the crazy remark, in response to which Quick quipped, "Are we talking Bitcoin or lottery tickets?" Okay, wait, stop right there. See, this is why there's no such thing as old school journalism nowadays. Challenge her. The moment she said 1 to 2%, that's crazy. You know what I would have said? Let's go back 10 years when Berkshire Hathaway stock was worth about $90,000 a share. Now it's worth about $270-something thousand a share. That's a good increase, right? What, a 240% increase? But Bitcoin, at the same time, had almost like a 10,000% increase. Is that crazy? Challenge them. Not a get-rich scheme. Okay. To be fair, well, here's what Eric Weiss really said. At Becky Quick and Pompliano, Becky, why do you think a 1% allocation to a speculative asset with almost no correlation to any other asset class is crazy, especially when, if successful, that asset or asset class would increase by 10 to 100-fold, which it already has. To be fair, Quick has been entrenched in the mainstream financial media for pretty much her entire career. Prior to joining CNBC, she worked for the Wall Street Journal. While not an excuse considering the blockchain space is comprised of plenty of Wall Street veterans, it does explain some of it. What's disappointing is that she came across not only cynical, but also short-sighted, possibly even insincere. That is, unless she really doesn't get that, unlike the lottery, crypto is much more than a get-rich scheme. Bitcoin was born out of the trenches of the financial crisis, when people's faith in the economy was shattered, not to mention the size of their retirement accounts. Shame on her for dismissing a movement whose origins harken back to the very subprime banking failures that Quick and the business network had a front seat in. That's why they don't get it. They didn't suffer like the rest of everybody else. They were the cause of it. And none of them went to jail. They completely dismiss the psychological aspect behind this. See, I was a psych minor in college. You just can't look at the numbers like these nerds do all the time. They want to look at the charts. They want to look at the numbers. You can't just look at that. You got to look at human behavior and why we do what we do. For every action, there was an equal and opposite reaction. 2008, there was a huge action that took place. What is the reaction to that? Everybody losing their 401k, everybody losing their jobs, gas prices skyrocketing, housing mortgage collapse, businesses that were too big to fail, and they used taxpayer money to bail them out. None of them went to jail, and then they turn around and want us to trust them again and keep doing business as usual? I don't think so. There's a reaction. There's a revolution. There's a revolt. That's called Bitcoin. That's called crypto. They don't get that. Or they do, and they're purposely misleading the rest of you because they got a huge stake in it themselves. That's how the wealthy stay wealthy. All right, let me continue. Pithy reply, but disingenuous. You think BTC in the digital asset class has a 1 in 300 million shot at being valued in the trillions? How many university endowment funds are buying lottery tickets? How many iBanks have lottery trading desks and lottery ticket custody? That's true. Yes, Bitcoin has a price attached to it, the value of which reflects what people are willing to pay for it. How is fiat money, which is also not backed by anything other than the government's word, any different? You know what? Every time I use that argument to the cash is king people out there, they have no answer. You want to know why they don't have an answer? Because they don't even know how money works in the first place. They don't understand that. What do you mean money's not backed by anything? The government is backed by gold. No, it's not. It hasn't been backed by gold since 1972. So when people lack education, people lose money. Bottom line. Besides, if Quick's concern is investors allocating their retirement funds toward a risky asset such as Bitcoin, shouldn't she be equally outraged that they might invest in a highly yield junk bond or complex Forex instrument? Stocks were an emerging asset class one time too. Further still, the New York Stock Exchange-backed ICE is launching Bitcoin Futures Exchange. Backed. If Bitcoin is good enough for the New York Stock Exchange, whose modest beginning was in 1792 under a buttonwood tree, why isn't it good enough for investors? Fox Business shows how to critique Bitcoin. Not all financial journalists are afraid of Bitcoin. Fox Business Maria Bartiromo, who incidentally is a CNBC alum, welcomed Gemini co-founders Tyler and Cameron Winklevoss onto the set at year-end 2017. Yeah, when Bitcoin skyrocketed. She covered the launch of Bitcoin futures, pointing out that at the time, the BTC's price spiked more than $1,000 in response. It's not that Bartiromo didn't push back. She did, questioning them about a market that is the height of speculation. But she gave them a chance to explain the heavily regulated nature of Gemini Exchange. And for those who are convinced that Bitcoin is a fraud, her response, then short it. Maybe CNBC's Quick should take a page out of her rival's book and educate her audience. Oh, there's the word right there. What is it that we do on a daily basis? Educate. Educate her audience about Bitcoin rather than scaring them. I like it ended on that last sentence. What is our business all about? We're about to launch a new company. The premise is still the same. Education. Educate. Now, let's on that same line of thought, I want to go to the CFTC. Retiring CFTC chief bites back at anti-Bitcoin bullies. Okay. I like this coming from the CFTC. Crypto hero. Retiring CFTC chief bites back at anti-Bitcoin bullies. The CFTC chief delivered more than an earful about the way some outsiders really feel about Bitcoin. J. Christopher Giancarlo, chairman of the U.S. Commodity Futures Trading Commission, is nearing retirement when his term ends later this month. Known as Crypto Dad, remember the SEC has a crypto mom. Oh, yeah, there it is. Known as Crypto Dad to the SEC's crypto mom, Hester Pierce, Giancarlo might deserve the title as Crypto Hero instead, considering the heat he has had to endure for refusing to stifle blockchain innovation. Oh, almost knocked over my computer. In a speech at the Eurofi Financial Forum in Bucharest, Romania, Giancarlo was generous with his opinions, citing Romanian poet Ion Luca Giargiali, who once said, "Opinions are free, but not mandatory." Giancarlo might think he used the platform to put forth a few free opinions, but he also dropped a bomb with details of his experience as a regulator in the crypto space. While he didn't squeal on anyone, the CFTC chief said enough. Crypto Dad made it clear that while the CFTC's approach has been to nurture the development of new derivatives products on crypto assets like Bitcoin, not everyone he comes across feels the same. He said, "We have resisted calls to use our legal powers to suppress the development of crypto assets and the underlying technologies that support them. Instead, we have favored close monitoring of market developments while not hindering the introduction of new products like Bitcoin futures, which have proven invaluable in letting market forces determine the appropriate value of Bitcoin." There's a word there that is important. The development of new derivatives products on crypto assets like Bitcoin. Okay, right now, there is no derivatives products or new ones being developed yet because they're waiting for the CFTC. Here, I'm going to give you guys a reason to show you why you're here at the beginning and why this statement is so huge. And I got to do it in a visual format. So let me find, where is it? Let me give you a visualization. So once again, these are not my words. This is the CFTC chief. The development of new derivatives products on crypto assets like Bitcoin. Keyword, derivatives. Why am I honing in on that? When you understand the world's money, where is the world's money supply? You see this one little block here? That represents 100 billion. So Bitcoin, right, or the crypto market is almost at 2 blocks because the entire crypto market cap is at 177 billion. So right now, let's just say it's 2 blocks is what the crypto market is in size. Now let's compare that to the world's wealth, where you got the biggest companies, see their blocks, 50th richest people, California's GDP, Fed's balance sheet, gold, stock market. See, this is stock market. Bitcoin or the crypto market is nothing compared to the stock market. Global money supply, look at this, 36.8 trillion. But let's look at derivatives. We are talking low-end estimate, 544 trillion. This. You want to know the high-end estimate? 1.2 quadrillion. This is derivatives. Bitcoin is 2 blocks, or actually just 1 block. This is derivatives. When this comes into the crypto space, what do you think is going to happen to this number? 177 billion is pocket change. We are talking trillions. If just 2 to 3%, 1 or 2%, 1% of what's 1% of 1.2 quadrillion? 10 trillion? 12 trillion? $12 trillion is just 1%. All right, you guys think that you're not here, you're late on this. You're still at the very, very, very beginning. Okay, I just wanted to highlight that. You gotta understand when you see guys like this. He's the CFTC chief saying different things. You got to catch on it. Education is key. This resistance crypto dad refers to has been a hurdle not only to innovation but also to the adoption of blockchain technology by businesses across jurisdictions. Giancarlo referenced an economic letter by the Federal Reserve Bank of San Francisco. In the letter, economists argued that the advent of Bitcoin futures had created more of a balance in speculative demand among optimists and pessimists, the latter of whom were handed away to bet on the decline in the Bitcoin price. Oh, okay, that's a nice way of saying when the futures came in, they manipulated the market. Literally, December 17, 2017. CBOE comes online. The entire market dropped from that point forward and hasn't been back since. You know what they did? They did exactly what the person I just read on Fox Business said. They shorted it. You don't have to like it to still make money off of it. You don't have to believe in it to still be able to make money on it. They shorted it. Manipulated the market all the way down because there's so low volume. One whale doing something is going to move the entire market. It's got to be in the trillions for it to start to stabilize a bit, where you can't have 1 or 2 individuals can control the whole thing. So that's what he's saying here. Regardless how Bitcoin bulls feel about BTC futures, if it weren't for Giancarlo's open mind, this institutional product would never have seen the light of day. While the commodities regulator wasn't responsible for approving the product, they did give the green light to the Chicago derivatives exchanges to launch their respective contracts. That has paved the way for exchanges such as BACT, which is poised to pay out its Bitcoin futures contracts in crypto and is viewed as a catalyst for the crypto market in 2019. Now that Giancarlo is nearing the end of his term, the crypto community will not be without an advocate in regulatory circles. You know what Giancarlo's about to do? It's whenever government officials, they retire, it's payday for them. They go back into the private sector. I predict Giancarlo will be representing a huge crypto firm somewhere along the line, if it's not IBM themselves. And he's going to get paid big time. That's why he's retiring right now. You see he's writing on the wall. The U.S. SEC Commissioner Hester Pierce has embraced her role as crypto mom and seems prepared to carry the torch for both of them. She actually said that. Crypto Dad gave a great speech. While markets are not always perfect, they have proven time and again to be the most effective means humans have to drive economic productivity and prosperity. She's preparing herself for retirement as well. Because when she retires and she goes back to the private sector, where do you think she's going? You think she's going to go work for, I don't know, Berkshire Hathaway or something? No. She's going straight to the crypto world. She's branding herself. Crypto mom. She's about to get paid. All right. Let's see, what's Coinbase talking about here? Coinbase CEO Brian Armstrong, crypto will disrupt the fringes of the economy first. Crypto will I agree with that. I just know crypto will disrupt every industry. But what's going to be first? The fringes. In a 45-minute long Ask Me Anything session conducted recently on YouTube, Coinbase CEO Brian Armstrong answered a lot of interesting questions, including questions about him personally. Like many of us, Armstrong says he was a nerdy kid growing up and was unpopular. Speak for yourself. He says his mother worked at IBM. And the family had one of the earliest 486 models of computer, which he used to learn and experiment in technology. Primarily, Armstrong describes himself as a nerd who likes to build things with technology. That's exactly why I thought in 2012, anybody messing with Bitcoin, probably nerds living in their mom's basement, playing Dungeons and Dragons and using Bitcoin as monopoly money. Yeah, there you go. I was a kid who was trying to read a book or whatever while everybody was playing sports. And I'm not knocking that because he's going to turn out being one of the wealthiest men in the world. Like Jeff Bezos, who, by the way, just lost $36 billion in a divorce settlement. Really? Really? That was the most expensive affair anybody ever had. Well, Helen of Troy, maybe. You know, that caused a freaking war. $36 billion divorce settlement? She came up. He addressed several other issues during the AMA, including the effect of trolls. Armstrong says that he has never been trolled by crypto people in real life. He thinks it's part of internet culture for people to be salty online but friendly in person. Yeah, that's because they're keyboard warriors. They find a whole lot of strength behind the keyboard. But, you know, you meet them up at the conventions, that's a different story. Unsatisfied with his answer, he says, how do you maintain your sanity in a world where the internet exists is like a deeper topic? Crypto disruption will work its way in from the fringe. Armstrong's views on the future of crypto adoption are perhaps the highlight of the session, and he didn't reveal them until the end. After talking about how he uses Bitcoin, he says he's given dozens of people Bitcoin over the years, and in the early days, it was as high as one whole BTC per person. Armstrong went into the adoption of cryptocurrency. He describes payments as a wide range of things, with things like coffee being square in the middle. He doesn't think crypto payments will disrupt small purchases first. In fact, he believes these will be the last type of payments for crypto to disrupt. Instead, Armstrong believes that crypto will work its way in from the fringes. He said, if you think about the most common transaction that happens in the common, I don't understand that. Think about the most mainstream thing, like paying for a cup of coffee at Starbucks with a credit card. There's a normal distribution of payments in the world, and that's square in the middle. And I think that's the last area that gets disrupted by digital currency. Digital currency is actually going to be used more on the fringes first and slowly move mainstream. The fringes are, there's power users of money, people that need to send $1 million to invest in something in 10 minutes somewhere else around the world, or a developer who's trying to script and automate distributions of payments to thousands of people for $1 around the world. And then on the other side, you have people who are unbanked or deplatformed emerging markets. Venezuela, this is kind of where crypto is playing. Crypto is sort of playing most strongly at the edges. These power users and then the deplatformed or unbanked. And then I think it's slowly going to work its way into the middle. That's what we're trying to do at Coinbase. We're trying to build the crypto economy, not just onboarding. Buy a little bit of crypto and hold on to it. but increasingly connect people so they can do more things. Earn tasks. Can they do voting? Can they do staking? Can they do borrow land or start to buy products with crypto? He just gave you guys an insight to what Coinbase is trying to do. He wants to be Amazon. He wants to be the Amazon of the crypto space. Coinbase started off, he just said it right here, started off with, buying and holding on to it. But what if you use Coinbase also to facilitate voting, staking, borrowing, lending, buying products because it's Coinbase approved or Coinbase backed? This guy here will be a Jeff Bezos. The Winklevoss twins will be a Jeff Bezos. You look at Tim Draper will be at Jeff Bezos. These early guys, I mean, they're rich right now, but you haven't seen nothing yet. Armstrong says the company is working to improve its Coinbase commerce product so that people who already use Coinbase will be more aware of ways they can use crypto. Ultimately, Armstrong is currently a tremendous player in the crypto world. If his vision is that crypto should disrupt the fringes before going mainstream, it's likely that he will be at least somewhat correct. Thus, we shouldn't expect to see mainstream adoption in the short term, but it's a long-term reality. And long-term reality, we mean within the next 10 years. All right? We're not talking about 50 years from now, your lifetime. All right, last up, Bitcoin surging 19%. Only the beginning. Halving will propel to meteoric gains. I agree with that. And that halving is going to occur May 2020. We've got 1 year in the Goldilocks zone before the people fully understand Bitcoin and start getting into it. We've got 1 year to prepare. On April 1st, the Bitcoin price initiated a large 19% rally from $4,200 to $5,000, peaking at $5,300 the next day across several major crypto exchanges. The rapid upside movement of Bitcoin, which occurred in minutes, and that happened because Asia woke up, is said to have been triggered by two major factors. At $4,200, there were around $80 million worth of sell orders, as the sell orders were absorbed by buy orders and liquidated $500 million worth of short contracts. Let me show you what examples. Sometimes you got to understand a visual to see what this means. So here, this is the buy wall. This is the sell wall. There were more buy orders that gobbled up all the sell orders. It's not finished yet because we're not even here. We're not 50-50. The buy wall is still much more. And the bottom of the buy wall, though, this is important to pay attention to. 3192. 3192. This thing, as I predict, will have a correction and go all the way back down to 3,000, if not below. That's what I predict. However, it's not going to happen yet because the sell now, we got a high sell wall here at 5207. So it's going to be hard pressed to pass 5207. This is going to have to come up a bit because the buy wall is down at 5,000. So we look at 24-hour low, 49.47, 24-hour high, 51.50, bouncing around between there. We look at the bot, Poloniex bot, which I think it is, 32 Bitcoin there. They've got a buy order at 50.97. That's what they're calling the bottom. They've got a sell order. Oh, this is new. Look at this. There's a new player on the board. All right, we know there's 32 Bitcoin sell order, but there's a 50 Bitcoin sell order on the board. $259,000 at 5180. 5180. So it believes it's going to hit 51, the 24-hour high, 5160. Something's about to go down. Pay attention to when the whales are doing something, because I don't see a buy order for that. There's a 16 Bitcoin buy order. 32, that's the bot. But this one caught my attention. There's another that's 11 Bitcoin. 50 Bitcoins here. And it's not even either. 50.1. So that is something that's actually moving. This 32 Bitcoin, that's a manipulation. This is the real deal. So if I were going to do some day trading, if they got 50 Bitcoins at a sell order at 5180, I will put in a sell order at 5170. Undercut them. All right, that's enough free advice there to make some money. Let's go back. Okay. The absorption of mass sell orders, a short squeeze of Bitcoin contracts, and the lack of resistance above 4,200 are considered as the main catalyst of the recent bullish movement of the dominant crypto. Only just a start for Bitcoin. According to a cryptocurrency analyst, the 19% price increase of Bitcoin was triggered by buy orders amounting to about 20,000 Bitcoin, worth nearly 100 million. Technically, if the absorption of sell orders at the $4,200 resistance level, which Bitcoin failed to test for more than 3 months in the first quarter of 2019, the orders would amount to well over 200 million. But if the rest of the movement from 4,200 to 5,000 level was triggered by 7,000 Bitcoin, the analyst said that a promising rally is expected as block reward halving approaches. Yeah, so those of you day trading, I'm not saying sell your Bitcoin. What I'm saying here is those that you make money on a sideways market. If I were to do this, I'll put a sell order in at 5170. I would then put a buy order again for everything that I sold. I would buy it at 50. This is at 5111, probably 5120. I will put a buy order in. 5120 buy, sell 5170. That's a big profit right there. Sell high, buy low, rinse and repeat. Okay, back. David Puel says, little something for you. 1, a reminder of how beautiful the 200-day and 200-week moving averages are. And 2, Bitcoin's 200-day medium, which just flipped to bullish and should serve as support in the next few months, currently at 4K. 3 7,000 BTC buy orders were the catalyst for this recent pump. That's 0.1% of the supply bought up instantly. In 416 days, the number of Bitcoin created every 24 hours cuts in half. 328,500 less Bitcoin will be created per year. This pump was just the start, so be ready, the analyst said. The 7,000 BTC figure came from a Reuters report, which cited Oliver von Landsberg-Sadie, CEO of crypto firm BCB Group. Earlier this week, Landsberg-Sadie said, there has been a single order that has been algorithmically managed across these 3 venues. So in other words, it wasn't that it was all in one account. They had multiple accounts moving this money of around 20,000 BTC. If you look at the volumes on each of those 3 exchanges, they were in concert, synchronized. Units of volume around 7,000 BTC in an hour. This was orchestrated. So why is halving so important? Analysts are carefully observing the price movement of Bitcoin ahead of its scheduled block reward halving in 2020, because historically, Bitcoin has tended to surge in price a year before its halving starts. What's today's date? April 6th. When is the halving taking place? May 2020. So next month will be 1 year. Large price orders prior to a block reward halving can be considered as a sign of confidence, because the rate in which Bitcoin is produced through mining drops following each halving. Accumulation of Bitcoin before a halving would imply that investors foresee the price of the asset rising as its circulating supply becomes more restricted over time. This is common sense. This is why you want to get as much as you possibly can now. In consideration of all factors, Peter Brandt, a widely recognized technical analyst, said that it would not surprise him if Bitcoin enters a new parabolic phase during which it recovers beyond $20,000. Whales are buying too. On Thursday on CNBC Squawk Box, Fundstrat Global Advisors head of research Thomas Lee said that whales, or large Bitcoin holders, began to accumulate the asset once again in recent weeks. What does that mean? Well, again, when you look at the coin cap, the market cap, this was at 120, 100, about 20 billion it was hovering at. We just had about 50 billion added to the market. That's new money that came in. That's the whales putting in new money. Bitcoin, Lee cites various positive developments pertaining to the crypto industry and fundamental indicators, such as improving infrastructure and rising volume. Bitcoin had a rough 2018, and for much of 2019, it's been steadily climbing. And from what we can gather, it's because there have been positive things taking place. A lot of the old whale wallets are buying Bitcoin, so it's been slow accumulation. Whales, most of whom sold relatively large portions of their holdings at 20,000, could be accumulating more BTC in anticipation of positive price movements ahead of the block reward halving. So if the big boys are doing that, what do you think you should be doing? Following suit. Don't do what they say. Do what they do. All of them are getting positioned. You have the opportunity to as well. So that is it for Early Morning Crypto Talk. If something major happens, I'll be back tonight. If not, enjoy the rest of your Saturday. We are working hard, getting ready for the launch of our new company. We have not released the name yet. Why? Because we're not MLM. We don't do hype that way. But this is going to be exciting. It's what we've been working on and preparing for over a year now. Some of you guys are going to make a lot of money because you're positioned right. Others may just sit on the sidelines and watch and then get in later and still make a lot of money. But your participation is not required for us to do what we're going to do. Anyways, we'd love to have you on board. Stay tuned. I don't know if I might do a Facebook Live later today. Anyways, you guys have a great day. Enjoy your weekend. Until next time, God bless. Bye-bye.